I guess big question everyone's asking today is the rally over? Stocks down big after a strong first quarter. Sandra Smith has more in today's trade. What are you seeing, Sandra?
That's definitely being brought into question today, Lori, but like all down days, folks are still looking up for opportunities in the market. And while we're seeing these significant drops in the stock market, take a look at this. This one might be not on your radar. So take a look. Natural gas, which we've been talking about hitting decade lows, up about 2.5% today, getting a nice spike from, well, the big drop that we saw last week. And if I look at a year-to-date basis, as you can see, it's been a straight down decline for natural gas prices. But as a result of the jump today, it's affecting some stocks that are actually in the green today. Chesapeake Energy, believe it or not, large natural gas company, up about 3.7%. This is the #1 stock to the upside in the S&P 500. It's had its struggles while natural gas prices have come down. There's some problems with its CEO right now, et cetera, et cetera. But it is getting a nice bounce back today. Range Resources, another natural gas company, benefiting from that. By the way, natural gas prices bouncing back today because of the cold weather in the Northeast as well as the Midwest. And also ExxonMobil, don't forget, not just an oil company, large natural gas company. So it is the only Dow component in the green right now. Sunoco also up. And guys, Lori and Melissa, the other way that we are seeing investors play this down market today is buying volatility. Those volatility ETFs and ETNs are in the green. So folks wanting to own those big swings that might be coming ahead.
Thanks, Sandra.
Yeah.
Today's market sell-off comes 24 hours before the Federal Reserve's policy meeting with investors waiting on the sidelines. What can we expect to hear from Ben Bernanke and company tomorrow? Lou Dobbs is here with his take. First of all, what do you think of the sell-off today?
Well, I think, it's just a natural reflex in this environment. It annoys the dickens out of me, as you know, to see the market start playing these games about looking toward Europe for direction, which is about as mindless as it can be. I got a kick out of the fact Sandra didn't mention the financial sector, which is not doing so buffo today, in large measure because of what we're seeing in Europe and in anticipation of what may or may not be forthcoming from the Fed. The conventional wisdom is the Fed can do nothing here. It's not time to extend the balance sheet. It's not time to touch interest rates in the judgment of most.
What's your take, though, on the stock market's addiction? Would you use that word to describe how stock investors view the Fed and this easy money that we've enjoyed for several years now? Is that partially to blame for the sell-off?
Addiction or persistent chronic dependency, any way you want to style it, it is that. And as a matter of fact, nearly everyone down on the street, everyone's looking for QE3. Come on, let's get past this meeting. Let's move to June. Let's talk. Let's talk a little new refreshment. But I don't think it's going to happen. I really don't, because I think we're seeing a lot of today's sell-off, and notwithstanding, we're seeing a lot of healthy things develop. We're seeing overall strong earnings. We're going to see, what, a third of the S&P report this week. We'll have a better instinct and understanding of what's happening, at least with corporate America, and earnings as a result of what we see this week.
But if you look at, one of the biggest indicators, GDP, this recovery has been slower than, any we have seen in, as far back as you want to go.
Right.
Such a slow recovery. So I don't know that we're seeing things necessarily get a lot better. And, you said that there's nothing the Fed can do, but a lot of people are calling for QE3.
Oh, I didn't say there's nothing they could do. I said I didn't think they would. And obviously all they can do here, if they can't lower rates, how low can you go?
Because
they've invented new moves in the past.
They have, and there's a twist which will conclude in June, and another $600 billion has been reallocated across the spectrum of assets. But the fact of the matter is, they're out of bullets here.
Right.
And everybody's got to understand that. They can extend the balance sheet, but after that, they're done.
And for what it's worth, rates are staying low on their own because of the geopolitics of everything going on. Wouldn't it be great, though, to see what the market looks like if you just X out the Fed, if you could X out so many of these other distorting factors in the world? I mean, what do you think the valuation of the market is?
I think intellectually and abstractly, that's a fascinating exercise, Lori. I think it would scare the dickens out of most folks to think of pulling the Fed back here. The Fed is in. Perhaps it shouldn't be in. It should, in point of fact, to be taken out of the equation as you suggest, and that would satisfy and please many people. But right now, without the Fed, I think we would have been in significant trouble.
Oh, I agree. I do agree.
And I think Bernanke gets a real short shrift, an unfair criticism on the policies that he's put in place over the course of the last 3 years.
But I just think we've become so used to it, so accustomed to it. So if we just could somehow, maybe just with language, be a little more hawkish with the language alone instead of the actual policy tools.
I take your point, and I agree with you. What I think I would like to see certainly is strong leadership on fiscal policy as well as monetary policy. And what we have now passing for leadership in fiscal policy, whether it be from Congress or whether it be from this president, whether it be from Republicans or Democrats, is pitiful and woeful.
Yeah, well, that we all agree on. So, Lou Dobbs, we will see you here every day at this time.
I love it the way we finish on agreement.
Yeah, there you go. And you can catch Representative Ted Poe tonight on Lou Dobbs' show at 7 p.m. Eastern. We look forward to that.
Thank you very much.
Thank you, Lou.